Hello and welcome to this new YouTube video. It's DC Capital and this is lesson 3 for the London Open series. In this teaching we will deal specifically with the central bank dealers range. The central bank dealers range. With the central bank dealers range we want to anticipate the projectionary stage or the Tudor swing and potential profit targets. The central bank dealers range is defined from 2 p.m. to 8 p.m. New York local time, and usually we want to see a consolidation and a tight range and open float to build up above and below market price. If the central bank dealers range is larger than 40 pips, we avoid the London Open session. If we are expecting lower prices and we are bearish for the day, generally price is moving higher, as high as 2 to 3 standard deviations for a down close day. If we are bullish on that particular day and we are anticipating higher prices, we're looking for that projectionary stage lower in price, and usually price is trading lower 2 to 3 standard deviations for an up close day. We want to blend the central bank dealers range standard deviations with the PD array matrix. And in my personal trading, I found out that the second and the third standard deviation coupled with a PD array is the most powerful, and it leads into really big winning trades, especially when holding until the London close time period. We are planning time of day and we are looking for potential trade entries during the London Open kill zone from 2 a.m. to 5 a.m. New York local time. Ideally, we want to enter in the sweet spot from 3 a.m. to 4 a.m. and we're looking to take profit in this 2-hour window from 10 a.m. to 12 p.m. New York local time. Central bank dealers range bullish example. First of all, we have to determine the equilibrium price point during the time period from 2 p.m. to 8 p.m. New York local time. We are using the lowest body close and the highest body close during the time period from 2 p.m. to 8 p.m. because this is defined by the central bank dealers range. During this time period, we want to see consolidation and a tight range, and it is building up open float above and below the market price. So each box is delineating one standard deviation. So this is the first standard deviation, this is the second standard deviation, and this is the third standard deviation. Notice that price is trading down into the third standard deviation and into a discount array. In this example, price is trading down into this bullish order block. For the entry, we are blending time of day together with the PD array matrix, and we can see that this order block has been mitigated during the London Open sweet spot from 3 a.m. to 4 a.m. New York local time, and this is also our trade entry. For profit taking, we want to take profit during the London close time period from 10 a.m. to 12 p.m. and we want to project the range from the central bank dealers range in the opposite direction. So basically what I'm saying here, if we are entering in the third standard deviation, we want to take profit, or at least partials, in the third standard deviation. And we can see that this candle here is during the London close time period and in the third standard deviation for profit taking. So I would take profit on this candle and closing my trade here. Central bank dealers range bearish example. We determined the equilibrium price point from the highest body close and the lowest body close, and we can see that this is a tight range and a consolidation, and there's open float above and below the market price. Also, the central bank leaders range is less than 40 pips, so it's ideal, and we can look for trade setups during London Open. So first of all, price is trading higher, closing that fair value gap here, and it's trading up into this bearish order block. Notice that price is trading into the third and fourth standard deviation of the central bank leaders range. So this becomes our projected range. From the first, second, third and fourth standard deviation, this is our whole entire projected range. And we can use that later on for potential profit targets. After price trades up into this bearish order block, it trades lower, and we can see here a fair value gap above the midnight opening price and a potential trade entry. Also, this entry was during the London sweet spot from 3 AM to 4 AM New York local time. Price is trading aggressively lower for a down close, and we are looking to take profit during the London close time period, which is from 10 AM to 12 PM. For profit taking, we can also project the central bank dealers range to determine profit targets. We can see these 4 standard deviations are projected into the first range, into the second range, and into the third range. And in this example, we can see that price is trading into the low end of the third range here in the third and fourth standard deviation for profit taking, while price is in the London close time period for profit taking. So it's really important to blend time and price together and to hold the trade for the London close time period. That's it for the video. I hope you found it insightful, and if you do so, please give it a thumbs up, comment and subscribe to the channel. And I wish you all the best and a successful upcoming trading week. Be safe. It's DC Capital.